If you have over $200,000 sitting stagnant in your bank, retirement account, or home equity, then you're literally losing money. On this show, you learn how to get that money working for you consistently and conservatively. Learn to grow your nest egg with your host, Sean Winslow. Let's dive in.
Hi, Dina. Welcome to the show, and thank you so much for joining us today.
Thank you so much for having me, Sean. It's a pleasure.
Thank you. It's always great to connect with like-minded people. The listeners didn't hear our conversation beforehand, but we talked about traveling, good food. Next time we're going to go to Europe, and then also when it comes to business, we have a connection on one, investor relations, aligning with people that have the same goals, same
Absolutely.
morals and outlooks as you, and then as well as some ESG investing. So we'll get into all of that. But before we touch base on that, could you just give the listeners a little background on yourself and your business and how you got to where you are today?
Absolutely. So my husband and I started investing in real estate, I want to say back in 2002. We studied a lot of classes before then. We read a lot and educated ourselves a lot. We both had really good corporate jobs. And we decided that we wanted to have a family. And we were probably in our mid-30s about this time. So we were a little late to the family starting game. But so we knew we wanted to really enjoy it and be present for it. And we both had, advanced degrees and very demanding jobs. So while they paid well, they took all of our time, and we're like, okay, how is this going to work? And you didn't need to be a mathematician to go, well, hey, if one of us stops working, we cut our income in half, literally, and then we're going to increase expenses. So that sounds like disastrous. So we were looking at real estate. Everything that we studied franchises, we looked at different businesses, but it always came back to real estate. And what we loved about real estate was passive income. And we did the residential route, which was great for a while, but it was also a lot of work. I don't know if you've ever done anything like that, where you flipped houses and did rentals. We had a property management company at one time, because property management can be a nightmare. So we thought, well, if we control that too, we'll be good. And it ended up being really, we definitely created wealth through real estate, and it was a lot of work doing residential. So I think probably around 2006, maybe 2007 was when we bought our first apartment building. And it was almost like, the angels have shown us the way, because it was so, I don't want to say so easy, but it was so easy in retrospect to what we did. And that led us more into commercial. And then, lo and behold, through our journey, met really amazing people, got very great mentorships and guidance, and started looking at passive investing and how that would work, and started to do that. And that was even wow, bigger wow. So really loved passive investing. And that's really what spawned us to start PCRP. Was my business partner. I've been in real estate for years and been friends for years, and really looked at, wow, we can actually help people with what we're doing, and align them in projects that speak to them, that ones that have spoken to us in accordance with climate, and ESG and what's going on. So that's really what started the conversation about PCRP, and here we are today.
Awesome. That's a phenomenal story. And what I like about it too is you've gone through different cycles of the real estate markets, which we'll dive into a little bit.
Yeah.
But you've seen a lot of different things. But first, I just want to highlight a few things for the listeners. First, Dina said before she got into real estate, she educated herself. And honestly, I think that's the best investment you can ever make, is investing in yourself, your education. But one thing she also did, where I think a lot of people get stuck, is she took action immediately. Where I think a lot of people, the whole analysis paralysis, you think you got to know the perfect amount. You got to, everything's got to be perfect. And just let me tell you from experience, nothing's ever perfect. You're never going to know enough. You're always going to need to learn more. I'm always learning more.
Absolutely.
So I think that's so important to hit on. I'm glad you brought that up. Educating yourself, but then just take action. You're never going to, nothing's ever going to be perfectly aligned. Just, you actually learn more by doing. So first educate yourself to a certain point, and then take action, and you'll be glad you did.
One of my coaches and mentors said, done is better than perfect.
Exactly. Exactly. And even if the first thing you do is not like the best deal ever, you're
Right.
going to learn so much, which is going to lead you to your better deals.
Absolutely.
How about that first deal? What was that first multifamily?
It was a 27 unit building.
Oh,
And
nice.
it was in, of all places, Wichita, Kansas, which I live in Orlando, Florida, Central Florida. Really, Windermere is our town. But I had a very good friend. We were both speaking, and I speak and educate on real estate and have throughout the country for almost the last 17 years because I'm very passionate about people in real estate and helping them level up. And she called me and said, "Hey, we've got this opportunity." A broker of a friend of mine called me and said, "This guy's going through a really, challenging time in his life, a messy divorce situation, and needs to sell a Class B building." So that we knew there was some upside in getting it at a wholesale price. And the interesting part about this building was it had 4 offices in the parking lot. It was on a main street, and Wichita Main Street's not like New York Main Street or bigger one, but it still had a lot of visibility. So they had 4 commercial offices right on site, as well as the units. So it was really a fantastic opportunity. So we jumped on it. And it was one of those things, like you were just saying, we'd never done it before. And so here's my husband and I and my friend and her husband. We're like, okay, let's go through the analysis. Let's, look at all the numbers. And, I can't say it was perfect going in. Like, I'm sure there were mistakes looking back today. Like if I look back at that deal, I'd probably be like, oh, we could have did this, we could have did that. But we did really well with it for that time. I thought it was fantastic. It gave us a really big sense of the diversity of cash flow. If you're doing single family homes, right, you're either 100% vacant or 100% occupied, right? It's feast or famine. But you have 27. If you got a vacancy, well, it's not the end of the world. You're still cash flowing. So that's what I loved about it.
Oh, that's awesome. How was managing from Orlando? Was that difficult at first? Because usually when you're at that size, it
Right.
it can obviously pay for third-party management, but it can't really afford on-site staff versus
Correct.
some of the bigger ones. So how was that, managing that from a distance?
We actually hired a third-party management company. And so we would outsource any maintenance issues, and they would have like a maintenance person that would come there. They handled lease up. And ironically, their office was like 2 doors down from where the building was. So
Perfect.
people thought it was just part of, our building, but it had nothing to do with our building. They were their own business.
Location.
Right. Instead, it was a small town. Everybody was in the same circle, right?
Right.
So it worked out really, really well. So if they had to show a unit and they just literally got up from their desk and walked 2 doors down, and they could do it. But yeah, I highly, highly, highly recommend having a management company, even if it was local. There's a level of professionalism with a management company and detachment that I think is really important as well.
That's a great point. And I also want to highlight a point you made too, is that you had, boots on the ground knowledge there. And I think that's
Correct.
Very important. If you're going to get into a new market, especially one that's, a flight away, not like an hour, 2-hour drive, you definitely want that boots on the ground knowledge. It makes a completely different situation for yourself.
100% agree.
And in listeners, even if you have to, if you give up like a decent amount of equity for that boots on the ground, just having that reassurance that they can just drive by it every day and check it out, that's worth any equity you're going to give up. So
absolutely 100%. And it was really powerful too, to have people there that we knew, and we built relationships there. And that's really how you start getting the boots on the ground too, is when you have somebody there, now their broker, now their lenders, their other business partners, because you go out there, you meet everybody. And so you start building relationships with people in that market that you can trust, so you could do more there and feel comfortable doing more.
Exactly. And then, who else feels comfortable too is brokers and other sellers. When they know you have that network there, they're like, all right, I'm comfortable that they can execute and
absolutely
operate this. So that's
a good
important
point.
Too.
Really good point. I know a lot of lenders. We did a land development deal a long time ago in Oklahoma, and the lenders at the time, because we were new to that, didn't really want to do a mortgage unless you had people on your team that were experienced and you had that connection. So yeah, it's really important.
Right. Yeah. Well, I know a situation where there I have a buddy who focuses on the DFW, Dallas Fort Worth market, and he's local, but he was
Yeah.
having hard time. Obviously, it's a competitive market, but he's having a hard time getting offers accepted in best and final. And a broker gave him a little tip, hey, you should, if you use this third party property management company, this lender, this attorney, this PPM attorney, one, we would feel more comfortable, but also the seller would. And then once he did that, he got that next deal accepted. So it does make a big difference.
It sure does.
It's not only can you as the operator, syndicator, sponsor perform, but can that team I just mentioned, can they perform too? Because that's a big part of closing the deal as well. So I'm glad you brought that up. That's a very good point. That
you know what they say, your net work equals your net worth, right? So it's like who you're associated with is who they associate you with, and your reputation as well.
Yeah, I think I say that quite a bit, so I'm sure the listeners get sick of when I say that. But there's a reason I repeat it. It's so true. And
birds of a feather, however you want to say it, right? Either way.
Right. It's so true, though. It makes the difference in everything you do.
For sure.
People say it's who you know, and I would say no, it's who knows you, and that's a point about having a network.
For sure.
All right. Well, awesome. Let's get into the whole ESG thing. And for those that aren't familiar with that term, maybe you can explain it and then how it benefits, obviously, the property, the world, but also the investor as well.
Well, ESG, environmental social governance, is really about, climate risk. And when I say climate risk, a lot of people maybe get a little back off a little bit, or they get a little political about it. This isn't political. This is just, hey, I think we can all agree weather patterns are changing, have changed, weather's becoming more severe. And what we are talking about at PCRP is, what do you do about that as an investor? Because it does affect our investments. It's going to. So we actually stay in more climate resilient markets because of that. There are, underwriters, insurance companies that are dropping insurance on projects or raising the rates so high that it's like as high as what the cost of the property, right. It's crazy. It's like, wow. And if you don't have insurance on a project, we can go into like all the nightmares that could be, number one, but number two, who are you going to get to underwrite that if it's not insured? I know BlackRock, State Street, bigger companies are all, they have to take this into account. They're looking at their portfolios and they're saying, okay, where are these climate risk properties? If they're in areas with, fires, floods, earthquakes, hurricanes, tornadoes, there's just a higher probability of that happening these days. And so it's a bigger risk when you think about how insurance companies make money, right? Yep. They're not going to want to do that. And I've heard, my business partner lives in Denver, right outside of Denver, and just north in some of the cities, they're dropping homeowners insurance because of the inclement weather and the disasters and things that they're seeing. So it's a real problem. Whether, whatever side of the climate debate anybody's on is who they're on, but the risk is real, it's also going to affect taxes when you think about it, because it's going to affect municipalities, infrastructure, local, state, and, the whole country. It's something that a lot of people are not paying attention to. Like, I know you and I were talking before, you guys are, we are. And I think, there are smart people that can go into a market and evaluate a deal, but I think it takes another level of smart to go in and look at the big picture and say, okay, for our investors, for our business, what does this mean in 5 years? What are we seeing? What are the risks? Is this going to be something that we have to worry about? if it's in Miami Beach, on the beach, which you've got some of the most, affluent real estate in the world there. It's amazing. It's beautiful. And there's a bigger risk there than, let's say, Central Florida, right?
Right.
So not that we're saying that there's no way a hurricane could not hit Central Florida, because one has, and I've lived through that, but it's not nearly what the risk is on the coast.
No,
so,
definitely.
So that's kind of the things that we weigh into when we're looking at markets.
Right. And it's, I've had from an underwriting perspective, I've increased insurance anywhere from 50 to 100% from, previous levels, just because you have to. Obviously it might not come in that high, but right. I think it's just smart to do that, because it's kind of, it's been twofold. I was talking to my buddy who's in insurance and commercial insurance, and it's like every so many years they actually reset the rates, and when they reset something, it's going to go up. So
I was going to say, they're not going to reset down.
Right. So every so many years they actually reset the average, and so that was coupled with COVID, coupled with the stuff we saw in DFW with the freezing and all that, and coupled with all the tornadoes and hurricanes we've seen. So that all kind of coupled together, and insurance has gone through the roof.
It's really interesting. I was speaking at a local women's entrepreneur meeting last week, and we were talking about this very thing. And it's just I love to be able to go in and be impactful to people and really help them look at investments the way we do. And one of the women said, she was joking. She goes, so I guess New Orleans is off the table, and I was like, well, if you think about what's going on there, and we were really hitting hard on ESG. And it was really interesting because it's a subject that I find it interesting that, like, I know you and I get it and we've talked about it, but like a lot of other companies, I don't see it anywhere. I don't see anybody really looking at that. And I'm like, wow, that's really interesting to me, in not a good way interesting. Like, well, what would they consider good? Are they considering the risk in there too? Because you've got to factor that into your numbers.
Yeah, for sure. And it's funny that actually I'm not really surprised, but it hasn't hit the real estate market, real estate investing market yet. But if you look at traditional finance, traditional investing, that is a lot of these major companies' main focus now is ESG. I know the firm I used to work for, when I was leaving, that was the big push. That was the big focus. I think now, last time I knew, over half of their products had an ESG focus, and their goal is to get to 100%. And that's, whether you agree with it or not, at the end of the day, it's happening. It is good for both the environment and the end user. And I'd like you to talk about that too. So ESG investing, how does it, we obviously know how it can help the environment, but you can touch on that as well. But how does it also help, local communities and the tenant?
Yes.
And then also the investor, who we have a fiduciary duty for.
Right. Think about something like multifamily, for example. Multifamily, it's going to reduce the carbon footprint, first of all, because you can fit more people into, a not a smaller space, but more of a, space that is going to be able to be built for the environment. You can look at environmentally friendly materials, which is going to, oh my gosh, you can talk about people's health, everything that affects it. Everything from landscaping, the chemicals that you use for that. Also, where you place these multifamilies, having more mass transportation available where people can walk or do mass transportation or bike to work in proximity, so you reduce carbon that way. If you think about also for the investors, this was really something that one of our, analysts on our team, my husband and Lori's husband, Mike is very, very passionate about ESG as well. And he's our risk analyst. And he's like, when we're looking at this, think about it. If you had a multifamily investment where you have, these things can be 40 million, 90 million, 400 million up, depending on the size and where it is. And you've got investors in that. And let's fast forward, 5 years from now, and nobody wants to underwrite it. How do you get the investors capital out? How do you get your capital out? Who's going to buy that? Even if they had all cash, because people do, and they could buy it all cash, but they can't get it insured. I mean, the impacts, the domino effect financially just was mind blowing to us. We were just like, oh, wow. And that's a real probability for some of these projects that I've seen in certain areas. The areas they look good. They look like a sexy investment, right? It's like, oh my gosh, the ROI is good. The buy-in is good and that, but what happens year 2, year 3, year 4, year 5? When these, weather predictions and patterns get worse, how is it going to affect it? And the people that are there. So those are a lot of the things that really we look at. I'm sure you guys have had similar experiences.
Yeah. And at the end of the day, you help the tenant, you help the community, it's going to help the investor. So you come in,
it is,
make it a better place for them to live, which also means making it more environmentally friendly.
Absolutely.
It improves returns. So for instance, like we do things like, low flow faucets and toilets, that's going to reduce consumption, which is great for the environment, but it also reduces overall expenses, which improves NOI, which improves obviously when we go to sell it. And then you can do other types of revenue generating things like solar. That's obviously great.
Say solar for sure
for the environment, and it's going to increase your top line with little to no expenses. Usually they take care of all of that, and you just get a percentage.
Exactly. And what's so interesting that you mentioned solar, because I remember a lot of people, especially me living in Florida, people were really excited about solar, but the technology when it first came out was not, it wasn't working that great. I know a lot of our neighbors had them on some of their houses, and it wasn't as effective. But today, and the improvements that they've made, it's very, very viable source. And you're not having the lapse in services that maybe 10 years ago, 15 years ago they were having, because I think that's a lot of people's caution with that. But it is really amazing. And a lot of the houses, not just new builds, but pre-existing homes, pre-existing multifamilies are looking at adding that in to upgrade their investments. And we've seen a huge upside to doing those kind of projects. If you go into like a Class B multifamily, and you start doing something like that, that's really powerful for the investors, really powerful for the community, the environment. I mean, gosh, if that's not a win-win-win, I don't know what is.
Right, exactly. And I get my LinkedIn inbox gets hit up all the time by the companies that do that. So it's definitely out there. The prices are coming down because there's more competition.
Yep.
And battery technology is better as well.
Absolutely.
And it's great. And then we also try to use recycled products as much as we can. So for instance,
sure.
A popular one is like a playground for the kids, recycled products. Yeah. But
I saw a huge, a woman that was in, I want to say it was Nigeria. I don't think it was, but it was somewhere in that region of the world. And she was recycling tires to use for playgrounds, the padding. Yep. And I'm like, what a smart idea, because otherwise these things are just sitting there. And they can really, it benefits everybody. The cost is minimal to do it. And it's a safer playground for the kids and helps the environment.
That's great. Yeah. When I was younger, I used to play on an indoor soccer field that had that. So
yeah,
it's great that people are nowadays looking to do that more often.
Agreed.
Let's talk investor relation. We just mentioned how ESG can be a benefit for them, but I want to talk about, investor relations, why it's so important, because we hear these days, if you have a good deal, the money will come. And I really don't agree with that. There's a lot of good deals out. There's a lot of money out there. Correct. There's also a lot of different types of investments that people can go. And we live in a world where there's so much going on in front of us. We have something at our, fingertips that takes a lot of our attention. And so I think it's so important to stay top of mind to your investors. And one way is clearly investor relations. So I know you run that in your business amongst other things. So I'd love to have you talk on that and what you do why you think it's important. Yeah. So take it away.
First thing that we do with our group is we do and offer a lot of free education. I think it's really important for people to make an educated choice. And as you said earlier, educate. You never stop learning. I still am learning things. I still am, if you look at the deals we've done over the last 20 years, my husband and I mean, the deal we did 20 years ago, it would be completely different today. It's just a different time. And our education is different. We know more. We've experienced more. So first and foremost, offering education so everybody could be aware of what the opportunity is, how to analyze it, right? I mean, I'm not a person that would expect somebody to just come into something and go, okay, great. Yeah, let's try that. It's especially if you're doing a syndication, you have to be accredited investor, 50,000 or 100,000, minimum investment in some cases more, just depends. And understanding fully what that meant, what they would get, what the returns are, what's the difference between ROI and IRR and AAR, things that maybe they haven't heard of yet. It doesn't mean they can't learn it or they're just ignorant to that subject, right? We all were at one time. So very much a fan of educating. And I would always suggest too, is who do you align with, right? Having that connection with somebody and their values, the types of investments they look at, does that resonate with you? Is it something you're interested in? Does it look good? Does the relationship feel good as well as look good on paper, right? I think both of those things are important. I've always been a person that I've resonated and gravitated towards people that had a like mindset, that really thought about what they were investing in and if that made sense for me and my, portfolio. If I liked that, then I definitely would gravitate towards that. And then number 3, I would say take action. I've been I always say in my former life, my background was psychology, personal development, personal growth. I was a training and development director for years when I worked in corporate many, many years ago. And I utilize those skill sets even when talking with investors about, the blocks that we have, what's holding you back, and working through those and seeing, hey, is it something you should pay attention to, or is it something that's holding you back from something? There's 2 different things, right? So if it's something that doesn't align with you, we only want to work with people that align with us and what we're doing. And so should you, so should everybody. But it could be something that maybe they need help with, like maybe it's just some kind of block or something that's holding them back, or maybe, a little bit more take action needed type of a scenario. I always joke, my husband used to have the paralysis by analysis disease, and I was more the ready, fire, aim girl. So both could be disastrous, right?
That's a great combo if you can find that equilibrium, that balance.
Well, it can be a great combo, but it can also do this, right?
Right.
So one of the things that really helped us was to get, and I do this with our investors too, is, what are your goals? What do you want to accomplish? Where do you see yourself? What's your why? Why do you want to, is it retirement? Is it a better retirement? Is it, vacationing, travel? Like you and I were talking about travel. That's one of our passions. And, that's something that you want to have time for, and passive income gives you time and money to do it. Right. So time and money were the 2 big things that drew us, my husband and I, into real estate, my business partner and I as well, and passive income particularly, because we can align our principles and our profits, right? And can make some things happen that we want to happen and hit those goals. I think when we talked about retirement, and I talk to a lot of investors, as I'm sure you do too, one of the big concerns is retirement. And I get it. I mean, if you look at the traditional retirement vehicles that we have, it's not just that, but it's what's happening with money and how the value of our money is. It's not, I talk about my term that I use is called buying power, right? How much buying power does your money have, and how much will it have based on the rate of inflation? Because the rate of inflation is the dollar value going down, not so much the cost of goods going up. So it takes more dollars to maintain that lifestyle. And so really setting some goals with the investors and saying, okay, do you understand this? And doing little things like the rule of 72, like how quickly will my money double it at a 6% interest rate over 5 years? And how much quicker can I get it to double so that when I do want to retire, whatever age that is, I'll be able to do that on my terms. I'll be able to still have the lifestyle choices that I want to have, be able to do the extra things that I want to do. Or if you're like my husband and I, retire at 39 and 40 from corporate America. We still work in our businesses, we still work at what we love to do, but not a 9 to 5 type job. So we joke that we're unemployable. We're not those people anymore. We can't do that anymore. But just the different choices that passive income can give you.
Amazing. You had some great points. One, the whole inflation thing.
Mm.
I was hitting on this hard on a few episodes ago on some of my solo episodes. So the listeners have definitely heard it. But now it's been 3 episodes in a row with other guests who've brought it up. So I'm glad you brought it up. It's definitely a thing, listeners. And I'm not just a dead horse here.
He's right.
It's real. And I'm glad you brought up the point too. Goods cost more, but it's not just because not some arbitrary thing. It's because there's more money supply. So that money you had is worth less because there's more of it. So to buy something, it's going to take more dollars than you had before.
Right. I think people look at money as a commodity. And really it's a currency, and it's back from 1971 when we got taken off the gold standard. Before that, when every dollar was backed by gold, it was considered a commodity, and it made sense to put your money. Probably, if I think back to my grandparents, or great grandparents, maybe it made sense to put their money in a savings and loan because it was real money. So if they put, $10,000 in there or $100,000 in there at 7%, they were really earning something, and being able to compound that. But if money isn't backed by anything, which it's not, and the more they print, the less our money is worth. So that's another thing too. I've had students go to usdebtclock.org and look at, the deficit and look at the printing power they've got. Have you seen that one?
Yeah, it's scary.
I know. Have you seen the time hop? It's up in the top right corner, I think, on that site where you can time hop 5 years and see what the money will be worth based on the current trajectory. And that is really where an educated investor can go and make some good choices for themselves, or better choices than just holding on to cash, which is, in my humble opinion, not really a good idea.
No, you're losing money.
Mm-hmm. Big time.
And it's another scary thing too, is 40% of the current money supply. 40% of the money supply over the history of the United States was printed in the last 18 months.
Insane.
If that doesn't scare you, I don't know what will, because and they're trying to print more, and they will print more to an extent. Hopefully it's not what they're asking for, because that'll just create more issues than we have. And
well, if you think about it, they're at a point where they can't stop, because I always think about it like, if you have, a household and their income is less than what their output, right, is, and they've got 2 choices. They can either default on the promises or they can borrow more. And that's the situation that we're in right now. So they either have to default or they have to print more money, because some people don't
raise
understand.
The debt ceiling.
Yes.
I'm sure people wish they could do that with their credit card.
I know, right? Yeah, we don't have that unlimited printing power with that. So that's a whole other thing. But yeah, so you're absolutely right. And I think the number that I saw that really shocked me was like from March of 2020 to October 2020 was $4 trillion printed. $4 trillion. So this affects everybody. It's going to affect investors. And these are the kind of conversations that I really like to have with our investors, to talk about, like, hey, this is, and it explains why maybe someone like yourself or myself makes these decisions. Like, okay, we're looking at the big picture saying, okay, what is this money right here going to be worth in 5 years? And I think
Right.
if you just do the simple math on that, you'll see it's wow.
Yeah.
Unless you can get it to create more. And that's passive income.
I agree. You need to put your money into something that produces income to keep
Correct.
up with inflation, and that is not correlated to the underlying, global markets where, traditional
Absolutely.
investors put their money.
Yeah.
And yeah,
Agreed.
that's why we're here to educate people
Yep.
and tell them what we provide and how it can be great in a rising inflation, scenario like we're in
Yeah.
today.
Yes, for
All right.
sure.
All right, Dina, we'll have two last questions. I know I didn't prepare you on these. You've kind of already hit the first one, but if you want to expand on it, you're more than welcome. The first
Sure.
one is, why multifamily real estate investing and how has it benefited your life?
Well, multifamily, like when we talked about just a couple minutes ago, we talked about the difference between having a single family rental versus a multifamily rental. That's the number one thing, was the cash flow diversity, because you're either 100% occupied, 100% vacant in a single family home. And when I was teaching this in a real estate class, I said, if you duplex, you're 50-50 if one is vacant. And, people always, they look at vacancy as bad, but it's not good or bad. It's just a thing, right? And we factor it in. We factor in vacancy to our rent rates, so we know that a percentage of vacancy is going to happen on a larger project for sure, on any project. So if it's factored in, now you can't get the same trajectory with a single family home because you just got one way to make it. But the more doors you have under one roof, the higher your probability of cash flow. I mean, it's just math, right? So that's the one thing. The second thing that I love with what we're doing with passive income is I love that it reduces the carbon footprint, and housing is a problem. Affordable housing is a problem. It's going to continue to be a problem. That's why real estate prices have kept going up and up and up. It's not because the market's so good. It's because we're having a shortage in supply. So I think the more opportunities for people that we can provide with multifamily, more places to live, good, clean, affordable housing, I think that's definitely a win for the economy. It's a win for the investor. And it's definitely a win for the environment because you have less of a carbon footprint if you're doing multifamily. And for passive income, a lot of people think a market has to be in a certain situation for multifamily to be popular. That's not been my experience. I don't know if I think you've probably had the same experience. There's always a need for it. I mean, it's not like, oh, if the market's doing bad, you need multifamily only then. No, it's all the time. It's a need all the time. So that's another reason, as an investor, looking at this from investor relations and just what we'd want to provide for our investors, is a great opportunity. And there's always a good upside with multifamily. And I think it does perform over time better when you look at just the math and the numbers. And if you do that and you put it in a more of a climate resilient market where you have less chance for weather disruptions and weather catastrophes, you can up your investment ROI significantly.
Yep. And how has it changed your life investing in multifamily real estate? What has it provided you? What type of lifestyle?
Oh my gosh. So I was thinking about when you were talking about when we got started, if you're old enough to remember 9/11, my husband and I were dating at the time, and we think about how significantly that changed and impacted our country, and really the world, but just impacted us and what we do every day. And then, 8 years later, we had the 2008. And so when I look at where we were from, 2001 to 2008, we had started investing in real estate. We had some really good coaches, got really good, well educated, and we still had passive income during that time from the apartment building, from other things. So our lifestyle didn't necessarily change. In 2008, when the real estate crashed, the values, ours included, of our properties went down. Everybody's did, but cash flow went up. And so a lot of people that are out there, they chant that cash is king, cash is king. And it's like, we always joke, my husband and I were like, no, cash flow is king. And that's what passive income provides. That's what multifamily provides. we've got the cash flow, because people didn't evaporate off the planet. They needed a place to live. So if you've got rental properties, they're gonna, during that time, that was a big opportunity. And then fast forward to COVID, right? Who knew? I mean, you talk about knowledge and planning, but this is life, isn't it? Life is what happens to you when you're busy making other plans.
Yep.
And during COVID, because of our family's choices with passive income and passive investing, we didn't have the financial challenges that other people may have had. And I don't say that lightly, because, when you think about something like COVID, we were all in the same storm, but not everybody had the same vessel, right? Not everybody was in the same boat. Some people didn't have a boat. Some people were hanging onto a piece of wood. Some people were in a kayak. Some people were in a yacht, right? And so I was really happy about our vessel that we could be in. It was scary enough going through everything that the world was going through at the time. So I think passive income I credit passive income for being able to not have to worry about that at all and just keep our current lifestyle. And it's not even so much about like material things. It's also about, what you can do for other people in your community, how you can give back. And, we are big animal lovers in my family. We love travel. We love animals. I am a foster fail mom. I can't foster an animal. It becomes mine. So there's no such thing as foster in this house. So we can't do that anymore. Right. But, we can give to the SPCA. Our local SPCA had a really tragic event, had a fire, and needed, to, place animals in safe havens, and being able to help with that and donate to that cause and things that mean something to us has also been what multifamily has given me and done for our family as well, and allowed us to be a good example to our kids and travel the world, see different countries. That's kind of what you and I were talking about before, like my picture in the back.
That's awesome. Yeah. Passive income, real estate gives you time and flexibility to do things that you want.
It does.
It's funny that you mentioned that too, because that's a big thing for me is being able to, have that time and flexibility, but on top of that, be able to give back to those things that matter to me and help improve the world. That's a big part of this podcast. So this podcast is obviously one about multifamily real estate investing, how a great way to, create wealth and passive income. But also with my background in finance, it's also about, it's not what you make, but what you keep. So we do a lot of episodes on personal finance every Friday. And so the second question I always ask, and this pertains to what you were just talking about, because before you can help others, you need to help yourself first and get your money
for
right.
Sure.
So the second question I always ask is, if you could go back in time and tell yourself one piece of financial advice, what would you tell your younger self?
Get in sooner and buy more. I mean,
I like it.
I really, that is the only thing I would do differently, is I would get in sooner and I would have bought more sooner. I remember we were doing what I call, knowledge by piecemeal, because we just really didn't know, we were both, my husband's majors were business, finance, marketing. And he was, a top executive in a company, that he was working at the time. And I was doing training and development. I was a training and development director at a large company, which ironically was a real estate investment trust. Didn't know anything about that at that time. Right.
Yeah.
So it was really funny, but when I look back, I mean, that's really, I wish we would have just jumped in sooner. I wish we would have, gotten some education and said, all right, instead of trying to do the whole analysis by paralysis thing, just do more. I mean, There's never going to be a perfect time. When we started our real estate investing business, and I share this story with any class that I ever teach. We got pregnant with our first child in the middle of transitioning out of corporate jobs and doing real estate investing as a business. And I remember being thrilled, happy, because we wanted to start a family, but also, and I always blame the hormones, but it's probably just me crying and, and my mom said something to me that was really powerful. She said, she's like, well, honey, you're excited. This is just, you're on the emotional turmoil. I'm like, well, it could have been a better time. And she said, sweetie, if your dad and I waited for the right time to have you, you'd be like 5. And it really hit me. I was like, she's like, the right time to do what you want to do is now, because if you put it off, you just don't do it. And she was so right, because anything I've ever put off, it just doesn't get done. Right. So
that's great advice. Common theme. And also it circles back to what we had mentioned earlier, that educate yourself, but take action. Don't wait on it. And
be bold.
We all know that the powers of compound interest. So the sooner you start, the better you're going to be off when you need it the most.
For sure.
Well, thank you, Dina, so much for your time. Where can listeners find you?
You're welcome to go to our website, PCRPgroup.com. We've got a lot of free education. We're about to release an educational series that I'm teaching. So you can sign up for our newsletters, our blogs, and sign up for that. That's coming really soon, probably the next week or 2. We'll be releasing that. And you're welcome to email me at dina@PCRPgroup.com.
Awesome. Well, we'll put that in the show notes as well. But thank you so much for your time. This is
it was my pleasure, Sean. It's great to meet you. Great to talk to you.
Yes, I look forward to hopefully we can meet in person one day.
Absolutely.
But yeah,
in Italy.
Hey, that'd be perfect. Sign me up. Sign me up for that.
I'll take you on the tour of the Amalfi Coast.
There we go. Yeah, for those that aren't watching, those that are listening, her background is the Amalfi Coast that she took herself. So.
On our last pre-COVID vacation.
Yes. So I'd love to meet you there. Well, thank you so much. And
thank you for having us.
Yes, of course. And listeners, Dina hit on this at the end. It's not what you make, but what you keep. So then you can create a wonderful life for yourself, your family, but then in the end, help the world and make it a better place. Because if we all do that, it'll just be so much better. So thank you all for your time again, and I'll catch you on the next one.
Hey, this is Sean Winslow. After being in the financial service industry for years and having candid conversations with good people just like you, I realized that so many of us are wanting an investment strategy that provides solid returns and consistent income without the bumps in the road. There's little known secret that your financial advisor doesn't want you to know. There is an investment out there that is less volatile and the returns are stronger. Get more details by going to greenbriercg.com and clicking on the free e-report. And by the way, if this show has provided you any value, then feel free to leave an honest written review and of course share it with a friend who needs it. See you next week for another great show.